Hi there, everyone, and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances. You need to decide for yourself whether it's appropriate to you. Okay, so our market has finished off the day today, sitting at 6,800. That is almost a whole week sitting at this level. So basically, yeah, it was last Tuesday where we popped up through resistance, but we haven't been able to really make any ground off that just as yet. We do continue to use that resistance as support in the short term, and we are now approaching that overall medium term downtrend line. This means we're squeezing into a bit of a pennant pattern, and we're just waiting for a breakout either way. It might break out higher. If that's the case, then around 69.50 is your upside target. It may break lower, therefore it could go likely 6,600, right? So look, yeah, we'll just have to see which way it breaks at this point of time. And yeah, probably not a whole lot more to say other than the fact that a lot of sectors in the very short term are looking a bit overbought. So would be surprised to see a small pullback on the horizon here. Now, coming across to the S&P 500, okay, similar sort of story. The only difference really is that medium-term downtrend line has broken. Clear higher peak and higher trough through here, but 4,000 seems to be that key level. So we are seeing early signs of a bottom, okay, but there's still a bit of key information coming up this week that could cause another reasonable pullback. But definitely starting to see some early signs of a bottom here on the S&P 500. Higher peak, higher trough, which is a little bit in contrast to what we're seeing in the XJO. XJO is looking a little bit more sideways still for me at the moment. Okay, so really, investors are sitting on the sideline at the moment. We're seeing lighter volumes in the markets overall right now as we head towards the Fed and GDP announcements later this week. So we're going to see the Fed announcement come through Wednesday night. That's going to affect our opening on Thursday morning. And then we're going to see on Thursday night the GDP figures come through. That's Q2 US GDP. So Q1 was negative growth. If we see Q2 in negative growth, then that's an official recession. So there's going to be a bit of tug of war going on here at the end of the week in marketplaces, guys, because you're going to have a potential recession, and if that's confirmed, you're also at the same time going to have the Fed increasing interest rates. Now, their commentary is going to be key. If they're going to continue to talk about interest rates going up in the near future to battle inflation whilst they fall into a recession, the market might get a little bit spooked on the back of that, right? So I don't think it's a good message to be hearing the Fed lifting rates whilst there's a recession happening. I think that's a very negative message. But the Fed might backflip a little bit here. Reason why I say that is inflation expectations are starting to fall. We've seen the likes of most commodity futures across the board, other than energy prices or energy futures prices, come down. Things like wheat and oats and agricultural sort of futures have come off to before, lower levels than really before the Russia-Ukraine war begun. But also other sort of metals and the sort of infrastructure commodities and that sort of thing, infrastructure metals have fallen a lot in the last month or so on the back of the fear of the US recession. So that's going to take a lot of pressure off inflation. The only thing that really remains is a lot of those energy futures. So we've got the likes of gas and coal, just to name a few, remaining heavily elevated, and coal's up at all-time high prices and haven't really budged for quite a while. So there's still a bit of a problem there that could cause some inflation, but nonetheless, what we're seeing is in the bond futures markets, inflation expectations are falling. Okay, so it's something we look at to try and work out where the bond investors are pricing the future inflation, and that's falling a lot at the moment. We're seeing bond yields also fall a lot. So that should hopefully take some pressure off the Federal Reserve. If they become a little bit more neutral or say, look, we're going to hold off on the front loading for a little while longer. Don't get me wrong, okay? The Fed will lift rates by at least 0.75 on Thursday morning, right? No doubt about that. It's going to go from 1.75 up to 2.5 at least. I'd be very surprised if they go less than that. It's not about the lifting rates for me right now. I'm going to make this clear. It is really about what they say is coming for the September meeting. If they give us no indication and stay hawkish in their commentary, I think that's a bit of a formula for the markets to pull back again. Okay. Um, especially if we see a confirmation of a recession on Friday. It could go the other way though. What if the US avoid recession? Okay, that's a possibility. Unlikely, but a possibility. So there's sort of things I'm worried about at the moment with markets, guys. There's a massive tug of war going on here between high CPI readings, okay, so higher prices, um, versus interest rates going up very, very quickly versus recession. What's going to sort of change this narrative? Okay, will it change this Fed meeting, or are we going to have to wait till September for this change to happen? So we don't know. That's the big thing. We just don't know. So as I was saying before, energy futures are up again today. Crude's coming back towards sort of 97, 98 now. But gas and coal prices are heavily elevated. So what we should be seeing really at the moment is petrol prices coming off a bit because crude was up near 120 for a period of time, back down below 100. Hopefully it stays below 100. But our utilities, so our power pricing and things like that won't cool off for a while. So there's still some inflation pressure there on the back of the energy futures being up, but pressure across the board in a lot of other places are falling. Now, one thing I just want to highlight here for the material sector is that if energy prices remain elevated, if crude prices come back above 100, and copper and other metal prices stay low, iron ore stays low, things like that, then you've got a definite argument of negativity towards material stocks. So there could be still some harm coming. So we definitely saw some signs of material stocks coming back to life on the back of the iron ore price going up. But we've got to watch this space carefully because there's some huge risks still here for our local miners. Okay. So look, some sectors are starting to show some signs of bottoming, guys. So let's talk about that a little bit more before we end this video. All right, so materials are showing very early signs. I'm not really seeing proper bottoming signals there yet, nor have I really seen higher peaks and higher troughs on the chart. So I'm not calling the bottom of materials yet. Financials are definitely showing some interesting signs of recovery recently in the Australian market, although sitting very overbought right now. So short term, I'd suspect we'll still see some pullbacks happen, but it does seem to me, looking at the charting, financials have pushed higher. Now, the other sectors that I'm really interested in right now are tech and discretionary. What we're starting to see is definitely some life come back into those beaten down sectors. Now, if inflation expectations are falling and we start seeing that flow into the lower CPI readings, one would expect the central bank's rate hiking cycle to come to an end at some point soon. Therefore, I would sort of dare say money will continue to flow into those sectors. So I'd be very interested after a small pullback because definitely tech, communication services in the US, or communication services already starting to fall off. But tech and discretionary in particular, they're overbought in the short term. But overall, I think they're bottoming out and they're sectors to be looking at closely. Now, I wouldn't be just buying into any stock in those sectors. This is not a COVID recovery where we've got a bunch of stimulus, right? That's definitely not the case here. So be wary, okay? There's only particular stocks you want to be buying into, and I'll be looking for the more value-based stocks in that sector, not just growth, like things like Microsoft, where they're displaying good growth, but what I mean by more value is that they're more of an established business, have had consistent profitability for a long period of time. So not only, what we're seeing is strong positive earnings growth, not a stock that's got negative earnings and strong growth in that negative earnings space, if you know what I mean, right? So I'm looking for stocks that actually make money, okay, that aren't overly priced, that have good future growth prospects despite a US recession. Things like Microsoft come to mind straight away. Okay, be wary of your social media space, your digital marketing type space. Your Snapchat sort of threw up a massive warning sign there. So we'll have to really keep an eye on that sort of part of the market. Also you got to be wary of anything sort of chip related with what's happening in in the whole Bitcoin space, in the crypto space. There might be less demand of people buying equipment to set up mining operations, okay, in the near future. So there's a few sort of areas of that sector I want to stay away from. But something that has a strong subscription base like Microsoft, I think is probably a good one to be looking at. Locally, PointsBet's starting to show some really strong signs of bottoming out. So there's a few sort of early signs. WiseTech's had a huge run recently, WTC. So there's a few quality stocks like WTC and Microsoft to look at, and there's a few sort of more speculative stocks like PointsBet that you'd want to be taking a look at. You know, falling from $16 down to what, around $2. Okay, crazy stuff, and starting to show some clear signs of reversing. So some interesting trading coming up for us, guys. Perhaps maybe, you know, just as everyone else is waiting for this Fed announcement. Once we get beyond that, there's some early signs of sectors bottoming. So the key sectors I'll be looking at are discretionary and tech in the short term on a pullback. Be looking at those. Construction materials, things like CSR, that have pulled back heavily and starting to bottom out. Um, and obviously materials there, just wanting to see what happens with this US recession. If we confirm a recession, then commodities might take another little tumble. Otherwise, we're going to at some point take a view that it's bottomed out as well, but I'm not quite there yet. All right, so look, just sort of mentioning a few sectors that are of interest right now, and you know, keep an eye on those after the Fed announcement. I'll probably be sitting on my hands until then. Okay, so that's the big one, guys. As we've seen for most of this year, those big Fed announcements have caused, and those big CPI announcements have caused a lot of volatility in the marketplace. At some point, one of these Fed announcements is going to cause a massive retracement back to the upside, okay? And that's going to be the one where they start backpedaling and start showing a few little, you know, hints that they're going to turn a bit more neutral for the time being. Not sure if it's going to be this week, guys. It might be the September reading. I'm not sure yet. We'll soon find out. All right. So thanks for listening into this video. Take care and bye for now.